Hello, good afternoon, students of class 10. Now I am starting the last part of this chapter, that is chapter number 3 of economics. This chapter deals with the last portion, self help group for the poor. Students, as you remember, I have told you in the previous class that there are two sources of credit. One is informal sources of credit, and the other is formal sources of credit. I had also told you that poor sections of the society are still dependent more or less on informal sources of credit. What is the reason behind it? The reason behind it is that the banks are not present everywhere, especially in rural India. Suppose even if they are present in the rural India, getting a loan from a bank is much more difficult than taking a loan from informal sources. This is because bank loans require proper documents and collaterals. The poor sections do not have collaterals with them, and therefore this is the main reason which prevents the poor from getting loans from banks. On the other hand, informal lenders, such as money lenders, know the borrowers personally, and therefore they are often willing to give a loan to the poor without collateral. In necessity, the borrowers can approach the moneylenders without repaying their earlier loans. So, it is easy to get loans from informal sources than from formal sources. But the money lenders charge very high rates of interest. They don't keep any records of the transactions and harass the poor borrower. In this way, the borrower falls in the debt trap. What is the solution? The solution of this is obviously that there should be some sources which provide loans to the poor on easy terms and with easy interest rates, that is, lower interest rates. With this point in view, in recent years, some people have tried out some newer ways of providing loans to the poor. The idea behind it is to organize rural poor, in particular women, into small self-help groups, or in short SHGs, and pool their savings. A typical SSG has 15 to 20 members, usually belonging to one's neighborhood, who meet and save regularly. Savings per member varies from rupees 25 to rupees 100 or more, depending on the ability of the people to save. Members can make small loans from the group itself to meet their needs. The group charges interest on these loans, but this is very less than what the moneylender charges. After 1 year or two, if the group is regular in savings, it becomes eligible for getting loan from the banks. The banks sanction loan in the name of the group, and it is meant to create self-employment opportunities for the members. For example, small loans are provided to the members for releasing mortgaged land or for meeting working capital needs, e.g., buying seeds, fertilizers, raw materials like bamboo and cloth, or for housing materials, or for acquiring assets like sewing machine, handloom, cattle, etc. The majority of the important decisions regarding the savings and loan activities are taken by the group members. The group members decide as regards the loan to be granted, the purpose, the amount, the interest to be charged, the repayment of schedule, etc. Again, the group is responsible for the repayment of the loan. Suppose if any member of the group does not repay the loan, this is pursued up seriously by other members in the group. Because of this feature, banks are willing to lend to the poor women when organized in SSGs, even though they have no collateral as such. In this way, we see that the SSGs help borrowers overcome the problem of lack of collateral. They can get timely loans for a variety of purposes and at a reasonable rate of interest. Moreover, SSGs are the building blocks of organization of the rural poor. Not only does it help women to become economically self-dependent, the regular meetings of the group provides a platform to discuss many social issues also and take decisions and act according to that. For example, health, nutrition, domestic violence, etc. Now you come to page number 52. Here the Grameen Bank of Bangladesh is on the bold letters. The Grameen Bank of Bangladesh is a very good example of how the rural women can develop themselves through small groups. Started in the 1970s as a small project, Grameen Bank in October 2014 has over 8.63 million members in about 81,390 villages spread all over Bangladesh. Almost all of the borrowers are women and belong to poorer sections of the society. These borrowers have proved that not only one poor woman reliable borrowers, but that they can start and run a variety of small income generating activities successfully. Now I come to the conclusion. In this chapter, you have seen the students that the money works and how they are linked with the banking system. We see that banks act on two fronts. On the one hand, the depositors keep their money in the banks, and on the other hand, other persons take loans from these banks. All the economic activities require loans or credit. Credit can have both positive as well as negative impact. In some situations, with loans, the borrower can prosper, but in other situations, the loans may make the borrowers worse off. We also saw that credit is available from a variety of sources which can broadly be divided into two groups: formal sources of credit or informal sources of credit. Terms of credit vary substantially between formal and informal lenders. As the case is of today, the richer households receive credit mostly from formal sources, whereas the poorer sections have to depend more or less on the informal sources. So, it is essential that the total formal sector's credit increases so that the dependence on the more expensive informal sources of credit becomes less. Also, the poor should get a much greater share of formal loans from banks, cooperative societies, etc. If these two steps are taken seriously, it will lead to the development of poor and thereby to the development of India. Dear students, with this, chapter 3, Money and Credit, is ended. The next class will be contained with questions and answers.